If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is September 2nd, 2020, and today is Wednesday morning. So looking at the highlights of the day, once again, the NASDAQ and Apple continue to surge higher. The question is, how much longer is this going to happen? But first, let's take a look at the economic events of the day. So looking at the economic events of the day, today at 2:15 South African time out of the United States, it's an ADP Non-Farm Payroll number coming out. Now, the ADP is a automated data processing company that processes payroll. So this is not the non-farm payroll number that's coming out. The non-farm payroll number is coming out on Friday, so just be aware of it. But this is a good indicator of the non-farm payroll change as a precursor to Friday's number. Now, I just want to highlight the fact that on Monday is a national holiday in the United States, so U.S. markets will be closed Monday. However, Forex symbols should be trading as usual. Now, starting out with the currencies, we're watching the euro and the British pound actually sell off, falter to maintain momentum, trending back to resistance, and looking at the indices. The NASDAQ trades higher, as we mentioned, and the Dow Jones rebounds. While looking at the commodities, gold gives up its gains and oil steady. Gold looks like it's setting up a new trading range. And lastly, looking at the stocks, Apple makes new highs once again. Now, it is a 4-to-1 stock split, so it's going to look like as if it's not trading higher. It looks like a gap down, but it really is making new highs. So let's take a look at the markets and see what we can expect from today's trading. So we're going to start here with the Euro USD at a 4-hour chart. You can see this nice capitulation to 120 yesterday, but couldn't sustain it. And we're trading back to support-ish area, okay? Previous resistance, subsequent support. So that's something to consider. I'd like to see this actually maintain itself at this level. If it does break it, we do see itself going back to this 118-ish level. So this does have some parameters to go to if it does make further correction later today. Now, looking at the GBP, also getting weaker versus the dollar, but hitting 134.63. Let's go to a weekly chart to give us perspective here. Now, this is a bona fide resistance-ish area right there, that 133.70, 134-ish level. So with that said, if we do falter around here and retrace, that's totally normal, okay, until it finds itself either pushing it higher and closing higher. So something to keep in the back burner for now, okay, until this really reacts. Now, this may be a upside down head and shoulders, okay? If we look at this, that would be the shoulder, this would be the head, and this would be the subsequent shoulder. So something to consider if that does happen, all right, later today. Now, looking at the commodities, looking at gold here, retracing from 1992 down to 1963. I think we're going to be trading a new range, okay, until this does break out and sustain its momentum. Yes, the overall lookout is that it's going to go higher, but right now, as we're finding ourselves just trading within this parameters of 1992-ish level and 1922-ish level, it's still a very, very decent range to be trading in. Now, oil's been pretty steady, but nothing to really write home about. If you look at a 1-hour chart, you could see it's just really consolidating at this area, 43.45, the higher 42.65. Question is it going to sustain this, or is it going to break lower? Okay, all intents and purposes, airlines are not back into full swing of things. Shutdowns are going up and down. We're going into October, which should or may be a surge in COVID-19 cases. So something to consider. If this does not break out higher, we may see it, if it does break on the lower end, may make a correction. Now, looking at the NASDAQ, continues to plow ahead, okay? Hasn't stopped plowing ahead. Now, when there is a breakout, right, from the time that we broke at this 97-ish level, okay, that was the breakout. We have an equal amount of range, okay, that we can go up to, okay, as we did from before, okay? So ultimately, we're doing that, okay? At our low, we were at 6,900-ish level, okay? The breakout happened at 9,700-ish level, okay? So you have another 3,000 points to still break out, okay? So I hope I'm communicating here. Let's make it more simple, okay? This is the reactionary move, okay? This is the breakout move, okay? So this is about 3,000 points, okay, right here, and this is about 3,000 points. And it looks, and it should, okay, quote unquote should, I'm saying here, okay, make a reactionary correction at these levels, okay? If it does make that reactionary level, it should, again, I'm saying should, retrace to about 50% of its level, okay? I'm not saying that this is the top yet, but when we do have this correctional move, it would retrace down to 10,977. Now, so far, the markets have been very, very strong, okay? The tech stocks have been very strong. The FANG stocks, the Facebook, Apple, Amazon, Netflix, and Google, specifically Amazon and Apple, have been very, very strong. Now, if you look at an Apple daily chart, you see that there's a gap down. Now, this is not a gap down. Okay, we were trading at 495 and now we're at 132. This is not a gap down. This is a 41 stock split, meaning if you owned one stock of Apple for $495, okay, now you own 4 shares, okay, for $132. Okay, so in essence, it's the same thing. It's the same price. You didn't lose money in stock split. It just means that there's more stocks to be sold. Now, historically, why companies do this is because it becomes more affordable for people to invest money into the stock, okay? They're not buying a $495 stock. They're buying a $132 stock, even though overall, before you, let's say, had 1 billion shares, now you have 4 billion shares, right? Because it's a 1-to-4 stock split, okay? But nevertheless, okay, it's still the same amount of money. So with that said, as this market actually makes a rally, we're just looking at it rallying right now from 132. If we look at a 15-minute chart, okay, you can't still see the basis of this, okay? This is a 1-minute chart, okay? But it's gone from 127-ish level up to 132. So it's still surging ahead. Now, I do want to see Apple either make a correction or sell off before I say that the NASDAQ is going to make a correction, but we're not there yet. Now, looking at Amazon, still plowing ahead, $3,500 stock, 3490, right below $3,500. Okay, if we do hit that, then that's a major correction for Amazon as well. Now, looking at the traditional stocks, they did perk up yesterday, including JP Morgan, as the markets kind of made a correction on the upside. If we'll go look at Alcoa, also trading a little bit above here. But like I said, it's got to really sustain itself on the upside to really make itself a breakout. So still, the markets are still finding themselves, okay, as this market is heading higher. Now, lastly, I want to look at the VIX. If we look at the VIX here, it's perking up. Okay, it's moving higher. We're looking at a 1-hour chart. From the beginning of last week until now, we're, up from 21 to 26. So it's a lot nicer volatility in the markets. Okay, so things are picking up right before the holiday weekend. So just be aware that we are going into the holiday weekend. We do have the NFP coming out this Friday. And just one more thing to mention about yesterday's ISM manufacturing PMI number that came out of the United States blew its expectations. So that's why the markets are really rebounding. But I do expect some sort of correction at a certain point. This is Fred Razak. I want to wish you guys a great trading day. Thank you.